Very good morning to all our mentorship traders. Start of a new week, 4th of April 2022. And this is a Monday morning, 9 a.m. Indian Standard Time. Before the market opens, the SGX is reflecting a mildly negative 23 points. Doesn't make much of a impact after Friday's sharp bounce back. Rather, I would say extension of the recent move. Nifty is already up over the last 5 days. This was Thursday was a minor 50 points negative close, but the tendency, the trend, the momentum is clearly well defined on the upside, and it will eye the 17,800 and maybe further ahead. Short-term charts have gone deeply overbought, which is very, very evident from the 75-minute time frame. So some kind of an ease-off slowdown is very likely for the momentum to come down, and then it should pick up. Intraday perspective, the last 75-minute bars low, which is around 17,600, is from a very short-term intraday support. And from a day-to-day perspective, yesterday's or Friday's low, 17,400. As long as that holds, I think one should continue with the bullish stance. I'm asking about Oro Pharma, Balrampur, Yemen shoot. Balrampur is there in my list. It did come up in our scans. I think it has come in the hike and decoy also. And yes, taking a look at the daily time frame, we can clearly notice that the trend is well established. It did go through a short-term correction, wherein the RSI dropped below 25, ATR stayed, and it is still below the monthly average, the rolling 20-period average. Aim was on the 29th of March, and from the 30th of March, we got a nice inside body with some shadows on the Heiken, based on which the trade would have got triggered here at this point. And so after which it kind of moved up and consolidated. And so if you get a move above Friday's high, which is here, it will be also be a hike and decoy trade. So Balrampur Chini definitely looks good. Oro Pharma has also popped up in my scan. I'm not a big fan of this stock, but looks promising in the sense that the trend has established pretty well, 8, 13, 21, 34, proper in order. Drop of short-term underlying momentum is very clear, 1, 2, 3, 4, 5 days of correction, takes the RSI sub 25, ATR at the 20-period rolling average mark, not that bad. Heiken Asian inside body and maybe a very small upper shadow. Yes, a very small upper shadow. You had a move on Friday, 1.8%, 12.5 points. So use a little bit of KC around 693 in the near month futures to enter. Good luck. I am not a big fan of Oro Pharma because of the fact that it's been fairly volatile in the recent past. You can see from the weekly charts, but this setup looks decent, looks pretty good. In fact, I like Balrampur Chini more because it has the support of the long-term trends behind it. So that's Iron's questions. Rajesh is okay. Rajesh loud and clear. Vishal, good morning. What's the difference between the rally led by high volume buying and that of led by short covering? So rally led by high volume. Now, when you say high volume, when we see these high volumes, how do we know that these high volumes are actually authentic positional buying or not? I did create a video on this few years back, talking about the myth of delivery percentage and all that. So when you, Vishal, when you take a look at a stock going up with high volumes, do not conclude that it is buying. When you take a look at the delivery percentage of that particular day, you might land up seeing that delivery percentage is just 30%, which means that 70% of that high volumes that you notice on the charts is essentially nothing but intraday trading, speculation. So when we combine high volumes or volumes per se with delivery percentage, and you should do this for the cash market stocks primarily, then it starts to make a lot of sense. Bounce back led by short covering are essentially shorts predominantly. This is relevant in those stocks which are there in the FNO. Which are not there in the FNO, how can there be short covering, right? So you should look at bounce backs on shallow volumes. The price is moving sharp, but the volumes are very low. Then you check that the delivery percentage is also very low. Then you can say, okay, then this is more like a short covering. I do not go by the conventional rule that open interest, falling price, rising, and all those. I generally don't think that they work. They make any sense in the market. Sanjay, good morning. I'm holding Deepak Nitrite long future. Request your view. Naveen Fluorine, I think, popped up in my scan, but I'll take a look at Deepak Nitrite. And it's looking good. I'm not too sure if we discussed this last week. I think we did. So what we notice is a clear-cut reversal of the underlying trend. It did go through a short-term correction or drop in underlying momentum, and it did give us a name. It did give us a name on this tall red bar, and then the very next bar, it started to give us an inside body with shadows and all. So you could have got into the trade if you had followed the rules around 22.45, 22.50 kind of levels in futures, and it's 23.10. Looking good. 75-minute time frame is like slightly slowing down, but still okay. Weekly charts looking for some resistance from the higher time frames suggest 2390, 2400 levels, psychological level. So I would suggest Friday's high, and you already have 4 consecutive positive weeks. So yes, this bounce back is going to mature itself close to that 2400 level. It's a round number, so I would suggest Friday's high is 2336, 2350 onwards. Please use the 75-minute time frame to trail your stop loss aggressively. Right now, you can keep your stop loss around 2250, 55, and after the first 75-minute trade, 75-minute trade, start aggressively trailing the stop losses, or else if you're happy with the opening and the move, if it shows you some gains, take it out, enjoy the book profits. Manish, for the first brush, do we need higher time frame with the momentum in the same direction? Not necessarily, because first brush is a setup in which it's a fresh trend reversal. The trend has just reversed, so we may or may not get the support of momentum from the higher time frame, Manish. If we have it, it's good. If we don't, we can still go ahead with the trade. Sanjay is further asking about IEX for long perspective. We discussed this on Friday. It was a beautiful move for the stock. I couldn't participate in that because it did not give me a higher shadow on this inside bar, but it was a beautiful move. I remember particularly discussing this stock during our Friday's live market session. I did add it in my observation list, and yes, it kept on stretching itself on the upside. Now, of course, at 232, it doesn't make sense to buy. If you've already bought it, 236, the previous high is very likely. So from here on, from 232 towards 236, I think should be the move that you should use to book out if you had purchased around 228. If you have not, then please don't chase it any further. Kuldeep, good morning. Aim and shoot, Tata Steel. I've drawn 2 volume profiles. Please check. Also share your views on Nifty versus gold weekly ratio charts. What's in store for us as an equity market investor? All right. So let's first take a look at Tata Steel cash market. 5 more minutes to go for the markets to open. That will give us enough time to take a look at Tata Steel on the daily time frame, I believe. You've not mentioned, yes, daily cash. And let's blow out this time frame. Yes. So you've drawn 2 volume profiles from the 25th of March till the 1st. which is this one, 25th, which is the correction, the short-term correction from this high to this low or to this point. So which is clearly showing you, if I remove the 1st of March, anyways, it is showing nice signs of reaccumulation. This is a sign of reaccumulation, number one. You've also drawn from 24th of March, I think, till the 1st. I don't know why you should have drawn till the 1st, because see, when we draw the volume profile from this low, I would like to see in this buying till this buying or this high or this high. It doesn't make sense for me to drag it all the way towards the 1st, because we are interested to see that from this point to this point was the rally. Where are the volumes placed? So better not to drag it till the 1st. So if I drag it till the 25th of March from the 24th of Feb, then I can see some amount of volumes at these price. So this 1300 is like a very strong level for Tata Steel in terms of volumes. A lot of things have happened in and around 1300. This high, and now probably this low. We discussed Tata Steel on Friday, I clearly remember. And because there was no upper shadows on the Heiken, it was a nice red bar. I suggested you to stay away and wait for it to deliver some shadows. The stock did pick up a pretty nice momentum intraday. Intraday, this was the first bar which picked up beautiful momentum, but after that it kind of underperformed. So I would continue to suggest that wait a little bit because of the range expansion that we have seen on Friday. Yes, we have already got an upper shadow, looks good. It's a beautiful doji and inside body on the Heiken. These kind of setups are pretty strong, but I would suggest that because it had seen a sharp expansion on the daily range, let's wait out a little bit and see how it plays out. Whether it can take out the 1340-41 level in the cash market or not. So let's observe a little bit. Your volume profile, the smaller one clearly suggests reaccumulation, which gave a little bit of confirmation with this Friday's move. The larger volume profile, I think you should stick to the low to the high rather than the current day. That suggests that 1300 and a little over and below 1300 is a very important level. And it's dealing with 1317. It went till 1340, slipped to 1317. So any slippage below 1300 will be a sign of concern. It had a great run. If you take a look at the weekly charts, it has rallied from 1060 to 1360, 4 weeks, and last week was a bit of consolidation, negative week. You can see the drop of size of Heiken bodies also. So this stock is in a strong uptrend. What it is doing now is just dropping its underlying momentum a little bit before it starts to rally further up. So I think from a cash market perspective, giving this counter a little bit of time will give us a better opportunity to buy. If it runs away, then your trigger is 1340. There's no doubt about it. If it completely runs away and you want to catch it, then you should put an alert at 1340. We'll take a look at that ratio chart with the Nifty and gold, but after the market opens, it's almost 30 seconds for the market to open now. After that, we'll come back to your question and we'll take a look at Nestle, Jubilant, and Deepak Nitrite for Vinod. Deepak Nitrite, we've already taken a look and discussed. Jubilant and Nestle are the two stocks that Vinod has for us, so we'll take a look at that as well. Rajesh has got Abbott, Alembic, and Astral. Alembic is there in my list. Looks decent, a nice inside body. So I'll discuss this in detail once the market opens and settles down. So let's see what's in store at the open of today's trade. 105 points open, the first tick that I see. 111 points for the Nifty. It's a gap up, I guess. Trading view charts are not. Yes, now they are just. Now they're refreshed. So looks like a minor gap up on the Nifty future. looks good, and it's stretching itself further up, 101, 102 points. Bank Nifty clearly outperforming right at the open. This is a much wider gap up from the Bank Nifty than the Nifty. So that's a big move coming in. 1.5%, 1.5% move up. It's 37,000, eyeing the 38,000 quite easily. I think it's going to try and test it out. Balrampur Chini was one stock we spoke about. Looks decent. It has opened flattish. Alembic is a stock which is doing okay. It's just open, not a very liquid counter. Lalpada had kept for a short opportunity because of this topping out behavior, but it doesn't seem like in this market it will be sensible to go for shorts. Balrampur is just flattish, so I'm going to quickly put some orders and we'll discuss the rest of your questions. There you go. Margin and okay, that's done. So 95 points, 100 points in and around is what the index is managing to hold on to itself. Not a bad deal. SBI is down 0.5%. It had a great run in the 75-minute time frame. So very, very obvious that this stock will slow down and then probably pick up some momentum later today or later this week. Sector-wise, most of them positive. Clear outperformance from Bank Nifty. CNX IT is the one which is slowing down now. Fine, not a problem, because that's the sectoral rotation that's happening. Banks have picked up. IT is slowing down. FMCG, I would like to take a look at ITC. No position on ITC as of now, but let's see how it behaves. Okay, finance, biggest gainer, big gap up. Private banks, service, media, oil and gas, real estate, PSU banks. So pretty healthy move from the markets, very well supported by the heavyweights, that is the banking and financials. So Nifty at the highest point of the day, thanks to the financials and banking pack. The move that we had last week has extended itself further at the open of today's day. 17,800 has been nicely taken care of. It's 17,850 now. So I think 18K is what it is eyeing in this particular move. In and around close to that 18K level, it should try to probably consolidate. We will keep a close look as it manages to do that. So 133 points and 586 points, which is 1.5% and little over 0.5% for the major indices. Today's open pretty good, pretty nice. I think we should be quite content with the open in today's trade. Bata, we discussed a disclosure. I have open positions in these 4 stocks. This fairly okay, holding all right to Friday's movement. SBI is the one which is consolidating at the open today, before probably it catches some further fresh momentum. Balrampur Chini, okay, nothing much. Last Friday's high is around 496.5, so that should be the immediate trigger for any kind of a breakout, but the chance of that kind of a move is very likely, right? Okay, pretty nice. Nothing much to take away. Nifty is hitting the day's high. But Dowell is picking up some momentum. Yes. Okay, so let me go back to your questions. Kuldeep's question on the Nifty versus gold weekly ratio chart. Now, broader markets, this is Nifty versus gold ratio chart, and he's asking from a perspective of the weekly. So let us blow out the weekly chart. So this is Nifty versus gold, and we can see very clearly that Nifty has started this, the underlying trend of this chart is improving, which means that equity or Nifty is slowly picking up momentum vis-a-vis gold. This is not a very strong sign per se, means based on this particular chart, it does not mean that from here on Nifty will outperform the gold or anything like this. It's just that this outperformance from gold is going through its correction. And this low, this high, so you have to keep a close look at the level of around 950 for this ratio. Remember, this ratio never gets traded, right? So these are all derived entities. So 950, 935, 50 level for this ratio. If we see slowdown here, then maybe for a short-term perspective, Nifty will correct short-term correction, which is very likely if it goes towards 18K. And for a short-term point of view, gold can pick up a little bit of momentum. See, gold's movement vis-a-vis that of Nifty is not a very good pair trade for short-term trading. It's pretty good for long-term investment, and as I say, 9 to 10% kind of exposure in gold is fine. Don't expect anything more than that. If we do some research in the long-term returns from gold, I don't think it will be more than, I don't think it will more than 10, 12% or even less than that. So yes, it still acts as a decent hedge to the long-term corrections or medium-term to long-term corrections. So from that perspective, it's fine. So for me, gold would be more like an SIP rather than timing it. We do time our ETFs. We try to add at lower prices when they fall below 25, the RSI. Same thing you can do for gold also. But overall, this ratio chart on the weekly time frame suggests that as Nifty extends itself towards that 18K mark, that's probably from where it's likely to slow down and give us a short-term correction. That is where gold might see some bit of bounce back. If we take a look at the MCX gold rates, 51,500. So you can see what gold is doing in the MCX is essentially this. It's just, so if 18 or somewhere around close to 18K Nifty slows down and gives you a short-term correction, and if that leads to some kind of a gold movement, then this is the breakout. This is the gold's breakout that you will be looking for. If you take a look at the Heiken Ashi candles, this phase, this bar's high and then this bar's high. If you want to time gold, that is. Okay. All right. Now let's come back to the Nifty, and we're looking at 162 points, 154 points. This is a strong move. This is a pretty strong move. It's definitely going to flush out the shorts for sure, and it's going to stretch itself much further up.